Hello, hello. Welcome to Star Knows Credit. Make sure that get everybody in before I start. I'm hoping I do not have to cut this live short because there is a thunderstorm trying to come through. All right. If y'all are in the chat, please let me know y'all are in. All right. Hello, Miss Tammy. I appreciate you being here today. All right. All right. This is my very first time going live on Facebook. I just created a page for Facebook. All right. Hi, Valerie. Thank you so much for joining. Thank you so much, Miss Mary and Amber and Monica. I really do appreciate you all joining today. If y'all wasn't in, I hope I do not have to end the live early because literally 5 minutes before it was scheduled to go live, it's thundering. It's thundering outside like we about to have a storm. So hopefully it's something that'll blow through pretty quickly and we won't have to end the live. So I'm going to just wait maybe another minute before I get on today's topic of discussion, just to see if anybody else is going to come in. But as I was saying, I do not want to have to stop, but we'll see. I don't have any control over the weather. I know, Mike. Look, we need it too. I'm in South Carolina. We need it too. So yeah, it's pretty dry and nasty out there right now for everybody. I think everybody's feeling it. I think everybody's feeling it. Prayers going up to all the casualties and people that have lost homes and stuff out in Hawaii because of wildfires and any other area that has suffered this year. This has been a record year for high temperatures. So we're going to be sending prayers to everybody that has really been affected by it this year and praying for some relief very soon. All right. So I'm going to go ahead and get into today's topic. So, if you all have seen and noticed that lately banks and credit unions are increasing their denial rates. So this can and may not be necessarily your credit, okay? Because right now there are many people that are living off their credit to survive, to make it because of inflation and because of people having to spend more money on goods and services, transportation, rent, all the above, all the necessities are costing more here in 2023 than before the pandemic. So everybody is feeling the pinch in some way. So I'm gonna go ahead and get through the data points that I want to show you all, and then I'm going to take questions at the end. So anybody that has questions, I see you, Miss Monica, I'm going to answer your question. But as soon as I get done with showing you all the data points and some of the things that we can do to help us in this situation that we are in, I will gladly take questions after all that. Okay, so as I was saying that the banks and credit unions are increasing their denial rate, I'm going to pull up on my screen right now an article. All right, here we go. So this is from money.com, and they said that rejection rates for credit cards auto loans and more hit historically high levels. And this article is of July 18th of this year, 2023. So it says it's not just you getting a loan, it's significantly harder than it used to be. Over the 12 months ending in June 21.8% of people who applied for credit were rejected, according to data released this week by the Federal Reserve Bank of New York. In other words, more than 1 in 5 people who submit an application for credit card, mortgage, auto loan, or any type of credit were turned down. That's the highest rate in 5 years, according to the New York Fed, okay? So just 4 months ago, the rejection rate was 17.3%, and now is at 21.8%. And read this part right here. The New York Fed said the increase in rejections was true across all age groups, but more pronounced for potential borrowers with credit scores less than 680. Typically in the bottom range, lenders consider good. So along with the interest rates going up, people are being rejected more for credit. So that's where we at now. But with good reason, because I'm about to pull up another article, with good reason that they are rejecting right now is because delinquencies are also high. Okay, delinquencies are also high. So it's not just people are getting denied, it is also that delinquencies are high. So let me pull that one up as well. So credit card and car loans right now are very delinquent. So lenders are really and truly scared to lend out money because of the potential of it becoming a bad debt. Because like this headline said, credit card and car loan delinquencies pass pre-COVID levels as consumers are feeling the squeeze. They're getting the squeeze. So that's why there are more people that are getting rejected, because more people are falling behind and are not able to pay their bills because of all the rising other factors that are going on right now in the world. So they say the rate of a new credit card in delinquencies hit 7.2% in the second quarter, up from 6.5% in the first quarter of this year. And this article came out just August the 10th. So this is all updated information. So I want to show you one more thing on another article that I found. So what is the Fed going to do about this right now? What is the Fed standpoint? Let me pull that one up. So the Fed is trying to fight inflation by raising interest rates. So the Federal Reserve has raised interest rate 11 times dating back to last March. And this is to help with the growth rate of inflation, because they're trying to get it back under their target of 2%. That's where they at. Now, a lot of people are saying, well, if they put more money into the economy, then we would be able to pay for our goods and service. But that's not what the Fed is going to do, because right here where it says the Fed would like to see wage growth decrease further. The Fed's concern centers on the fact that higher wages feed into higher demand for goods and services, which contributes to higher prices, which that is true. Because it is really and truly because of all the money that they put into the economy during the pandemic in 2020 and 2021, the stimulus checks, the child tax credit, the higher unemployment, amount of money that was put into the economy. We are now feeling the brunt of all of that money coming into the economy all at one time. So right now, that money that we got during the pandemic, according to some more data, has dwindled down. So people that was able to actually get ahead and save during that particular time period is now wiping out of their savings, based on this article right here that I'm sharing. The access is no more dwelling pandemic savings. So right now, households, they are spending more. We are consuming more goods and services. Personal consumptions was higher than previous reported for the fourth quarter of 2022 and the first quarter of 2023. So right now, we are feeling the backlash of all that money coming into the economy to help. And in efforts, it was helping some people, but it was hurting us in the long run. Nothing is free. Nothing is free. You're going to pay for it somehow. And so right now, that's where you get higher rents. People like myself that was wanting to be first time home buyer, who can afford the amounts that they're selling the houses is so inflated, along with the interest rates being high at the same time. So this is, a terrible time for this. Historically, things have always turned around, so we are hoping that that's what happened. But in the meantime, we have to do things for ourselves. So when I was looking at all this, because I try to keep my ears to the financial streets, especially for the channel, when I was looking at all these different reports that's been coming out, credit card debt right now is in the trillions, because it's not necessarily that people are doing shopping sprees and all that other stuff. Like I said, a lot of people are really trying to make ends meet with their credit cards. So what are some of the ways that you think that we can combat what is going on in the economy? Anybody that's looking at this on the live, whether you're on Facebook or if you're on YouTube, tell me what you all think in the comments. Is what can we do ourselves to make sure that we are ensuring our best financial future? Does anybody have a comment they want to make on that? So I just want to show you all some numbers real quick. This is where credit card debt is. It says that credit card balances increased by 45 billion, a 4.6% quarterly increase, and now stand at 1.03 trillion. Auto loan balances increased by 20 billion, continuing the upward trajectory that has been in place since 2011. But then we just read a report that showed where people are delinquent on these same things. So Miss Monica said, what about investing or saving? Yes, investing and saving is one of the best things that you can do right now. But then people gonna say, well, I barely got money to make ends meet now. So how am I gonna be able to save? That's what's been the question when some people that are in the finance space, including myself, when we bring that up, that's the first thing people usually say, well, I barely have enough money to cover my bills now. So what am I supposed to do if I can't save? Because as we just saw in that other article, that the dwindling of the savings rate is down since the pandemic. The savings rates are down. So people that may have been able to build up a savings during the pandemic, because people wasn't able to go out and consume as much either, you know, because a lot of the world was locked down for a while. So people weren't able to go outside and spend a lot of that stimulus money until after everything started lifting. So now we have become great consumers of things, along with rising costs of food, transportation, and housing. All right, so I'm going to go ahead and list some of the things that I would want to say that can help us circumvent some of these issues that we got going on right now in the economy. So my first one would be is to, I'm going to try to type this on here. You want to start a relationship now with a credit union. That ain't what this. So this thing ain't acting right. So you want to start a relationship now with a credit union. That's one of the best things that you can do now. Because the reason why I say that is because when you already have a credit union or a bank, which I prefer credit unions better, any of your financial needs, you will want them to meet that need for you. So that means that if you are looking to buy a home, or if you were looking to get a new automobile, or whatever it is, a debt consolidation loan, you want to already have a credit union that you are dealing with for those life events, bigger life event things. So starting a credit union relationship now, I would never say that it is too late or not even worth building a relationship with a credit union. It's always worth building a relationship with a credit union. And I prefer credit unions because you are the member. When you put your $5 all the way up to $25, whatever their requirements, their minimum is for joining their credit union, when you put your money in there, right, that is your share in the credit union. So instead of like banks, instead of them paying these big dividends and big shares to their shareholders, the money comes back to the members that make the credit union, because credit unions are non-for-profit. So what do those come back to? When they're not paying anybody, they're giving it back to you as a member in form of lower interest rates on your homes, lower interest rates on your cars, lower interest rate on your credit cards, lower interest rate on your personal loans, your debt consolidation loans, higher interest rates on your savings, your money markets, your IRA accounts, all the savings, all the money that they're not giving out to big time shareholders, they're giving it back to you in the form of lower interest rates on credit products and higher interest rates on saving products. So that's why I always advocate for is joining a credit union. So you always want to be a part of one. Banks are good, don't get me wrong, but I just prefer a credit union because they're giving you the money back instead of that money being given to big people that don't really, I ain't gonna say they don't need it because, but it can be better well given back to the people that finance the institution, because without your money being in the institution, there would be no institution. It's your money that runs the institution at the end of the day. All right, so number 2, you will want to create more income streams during this time. I think in 2020, a lot of businesses was birthed. Even my own was birthed in 2020. So a lot of businesses birthed in that time. But if you are able to turn something that you love to do into a side hustle or something that can make you money outside of your 9-to-5 job, then that's what you should do during this time. Creating income streams with your experiences and your talents. Okay, something that you can start soon, not something that you might have to go ahead and like had to take a class for it because you're not skilled in it. Something that you are already skilled in that is a need is a really good way to start income streams. Like myself, okay, I worked in banking for 15 years, as most of y'all are subscribers on my channel and looked at some of my videos. Y'all know I've been worked in banking and credit union for 15 years. My degree is in accounting and business. So what do? I created this channel to give my knowledge in this area. Okay, that's an income stream because YouTube pays for my monetization now since I have met their requirements. So that's an income stream. As long as I make videos and as long as people are watching them, that's an income stream. So maybe you have something that you are experienced in that you have been doing for years at your job. Some of y'all are very good writers. You write very good memos and emails and all that type of stuff. Well, you should be starting a website and starting a blog that you can get your blog monetized by writing things that you are interested in, writing articles on those things and getting AdSense, the same AdSense they use to monetize YouTube are the same AdSense that monetize websites by putting ads on the websites as well for things that you are interested in. If you are a great writer, something that you don't have to go to school for, it is just something that you have already been doing in your 9-to-5. Some of y'all are very great cooks and bakers. You might do that at your job. You might want to start a side hustle cooking and baking out of your home, baking cakes for events and all types of people who love cake 365 days of the year. So if you are in baking, cookies, any type of treats and stuff like that, stuff that kids can take to their teachers for little parties, if they still do that, those type of things, little treats, that's a job. That's another stream of income, especially if you like to do it anyway. You know, also, I just believe that everybody should use whatever their talent is in some way and capacity. And because we have social media right now, we are able to put ourselves out there without some talent scout finding us out or anything. You are able to get on any platform as long as you have a phone. As long as your phone can connect to the internet and you can get on the app and your phone has a camera or video, that's all you need to get started. It's all you need for a lot of things. People have gotten rich doing TikTok videos, reels on Instagram, and all those type of places, being influencers, being affiliates, selling other people's products, doing product reviews for things that you buy anyway. That is another way of people making money. Amazon has something they call influencers, where you make a video on something that you bought and upload those videos. And I don't probably ain't a person in here that can tell me they have never bought anything off Amazon. But there are ways to make other streams of income. All right, so once you get that other stream of income going, my third suggestion is to start paying down your current debt, especially if your credit cards are maxed out. If you got cards that are over 30% of utilization, you need to get those credit cards down, because you are paying more money in interest, and that money that you're paying in interest could be used somewhere else. So the quicker you can get out of credit card debt, that is compounding every month and going to cause you to pay way more for whatever it was that you originally got. You're going to pay way more for that thing over the time that you are accruing interest on it. All right. So you want to make sure that we are paying down debt. If you are not living below your means, this is number 4. It's high time to start living below our means as well. Stop overspending on unnecessary stuff. We have to categorize our needs from our wants. We have to categorize those from our needs and our wants, because there's a lot of stuff that we need and there's a lot of stuff that we want that we don't necessarily have to have. Sometimes you have to delay gratification for long-term satisfaction. That's what I call it. You may have to delay that gratification for now so that you can enjoy life in the future and not have to worry about being in debt to your eyeballs. So let's start by living below our means and really and truly getting intentional about that. So that brings me to number 5, create a budget. That'll help you live below your means if you can create a simple budget. It don't have to be something spectacular. Just write down what your expenses are every month. Write them all down, including your Netflix and any of your entertainment, everything you do for entertainment, even your stop at Starbucks, or if you get a biscuit at McDonald's in the morning, whatever you do routinely every month, write it down. And what is in that list that you can cut out, that you can do without? Like, do you have to have every streaming platform, or which ones do y'all watch the most? Do you have to have Netflix, Paramount, Peacock, Hulu, HBO Max, Showtime? Do you got to have all of them? Or can you not say, okay, we look at these the most, these are the ones that we're going to kick, and we're going to get rid of the rest of them? So looking at the numbers. Numbers don't lie. People do. Numbers don't lie. So looking at the numbers, what is it that you can cut out to help with your budget? And then once you do that, number 6, then you can start saving for emergency. So you need to save you an emergency fund. Start putting money back as you're paying down your debt. You're living below your means. You're creating another stream of income by doing something that you experienced in or have talent in. You're creating some more money for yourself. Then you need to be putting that money into some type of savings, something that you can get out easily. So let's start an emergency fund. When me and my husband first started to start save money back in 2017, and I really took a look at the financial situation we was in when our car had broke down and we had to get some brakes, and we didn't have the money. We was gonna have to let our rent be late in order to get brakes, and this was just in 2017. I was like, no, we can't be this. We wasn't broke. We were just living from paycheck to paycheck, which is just over broke. We was literally one paycheck away from being able to lose everything. Because had I not had a really compassionate landlord that understand that things come up, that could have been an issue. So when we first started saving, our goal was to do 500 a piece. So 500 for him and 500 me, to be 1,000 in our savings. I had so much debt that I could only save $5 out of my paycheck, and I got paid every week. But after I wrote down everything I had to pay, because I had so many credit cards that were maxed out, and I think at the time I was over $25,000 in combined credit card debt. So it was a bunch of credit cards with little balances, and totaling up to like 25,000. And at the time, I think I was making maybe 14 an hour or something like that. It was very not, for the debt that I had. I was really and truly in the red every month. I had more debts than I had income coming in. So I had to learn one thing is for sure, you have to pay yourself. So I didn't have but $5, but I put that $5 in a savings. And as I started paying those credit cards down, eventually I was able to save anywhere from, I started at $5, and by, excuse me, and by 2021, no, 2020, I was able to save $500 every time I got paid instead of just $5, just by paying my debts down. It took me 3 years to pay them down to get to that point. But you have to start somewhere. And I had got tired of excuses of me not saving and saying that I couldn't, to not saying, okay, it might not be big, but this adds up over time. So those $5, they added up over time. And then eventually I was able to save more as I was knocking down each card, at a time. And then the more money that freed up, the more money I could save. Also started a side business in 2020 that helped me get some more income in. Also changed jobs. I went from another credit union that was smaller to a bigger bank that was able to pay me more money. So sometimes you may have to change careers, or you could be in the same career, just get a different job that pays more just to help you out a little bit. So I did that as well. So these are just some of the things that you can do that can help you when you know that, according to the articles from the Federal Reserve Bank, that household debt and credit is higher. And so banks are going to start denying people because they already know that you are living off your credit. They know this. So the interest rates that you're going to be paying for these goods and services are going to be crazy high, because the Fed Reserve has already raised the rates 11 times since 2022, based on the article that we read. And the rates may go up again when they have their meeting in mid-September next month. So we don't know when these interest rate hikes is going to stop to try to balance out this inflation that we have. So we're going to have to do our part to make sure that we are trying to put ourselves in a good financial situation, because we don't know who's going to be the next president. We don't know how that's going to look like. We don't know when all this is going to turn around. So we got to do our part as well as try to get ourselves in our best financial standing. So if that is all I had to talk about. So if anybody got any questions, I'm ready to take on some questions right now. So Miss Monica, if you are still around, is it even worth joining the credit union at this point in order to rebuild credit? Yes, it is. Yes. I would always tell you, like I did at the very beginning of this, when I was telling you the things that you can do, that's the best thing you can do, is be a part of a credit union. If you already have had an account with a credit union and you are not using it, say you just let it go dormant, you're not actively using it, maybe you got another bank your direct deposit is going into, you want to start using the credit union as much as you can. Yes, you want to use your credit union. All right, let's see. So You said that you recently started an Amazon seller account. That's good. That's really good. And it said it was pretty complicated completing the application. I'm sure. I'm sure. I am sure. So does anybody have any questions? I also wanted to remind you guys that I am doing the Credit Ready program for anybody that want to learn more in depth with me. It's going to be a 6-week course from it's going to start September the 18th and it will end the week of October the 30th. That'll be the complete 6 weeks. So if you are interested in learning any more about that, please go to my website at starknowscredit.com. So big picture thought, PenFed or NFCU, which is better to start in your opinion? Okay, so here's the thing. When it comes to credit unions, you want to pick which one that will be able to handle all your financial needs under one roof. It's not necessarily a bad thing to have multiple credit unions. I'm a member of PenFed and Navy Federal. Okay, I probably got 5 credit unions I'm a part of. But if you want to only have one institution that handles all your transactions, then you want to pick the institution that's going to give you the better fit for all your financial needs. Meaning, okay, if you know you want to buy a house, but you want to get a credit union that can do mortgages. If you already buying a house and maybe you want to refinance, well, you might want to look at credit unions that can do that too, or home equity loans, or if you're interested in getting your first credit card, you never had a credit card before, you want to get credit unions to have credit cards, because not all credit unions offer credit cards. So you want to look at the ones that have all your needs. If you have a business, do your credit union have business checking accounts or business products? Because like Navy Fed is the biggest financial financial credit union out there. Then you got PenFed that is it's number 3 on the list of the largest credit unions. But guess what? Navy Fed have business checking, personal products, business products. PenFed only have personal products. They don't have any business products. So if you got a business and you want to move all your accounts to one place, with PenFed wouldn't be the good choice for you, because PenFed does not do business lending. And thank you, Jesus, I hope I'm saying that correctly, for your $5 super sticker. I sure do appreciate you. Thank you so much. So you just want to make sure when you are picking any type of financial institution that it has everything that you would want in a financial institution. It's kind of like when you get in a relationship, you want to make sure the person that you get in a relationship with has all the qualities that you want. That's the same thing I think about financial institution. Make sure your financial institution have all the qualities, all the financial products that you think you may need, even in whatever stage of your life. Okay, whatever stage you are in your life. Because when I first got my first credit union account was when I first went to work in a credit union, and I was 28 years old. No, yeah, I was 28 years old at the time. So I had my son at the time. He was 6 years old. So I wanted somewhere where I could start an account with him so that he can, as he get older, still have an account. And he does. He still have that account there with the credit union all these years. And he's 22 now. So it's just one of those type of things. Can this account grow with you? You know, does it have IRAs? Does it have money market? Does it have everything, insurance, trust? Does it have all those different things that you're going to need for each stage of your life? That way you can have this one institution, if that's what you choose, to grow with you all the way as your financial needs will change as you get older. So you say you have a personal and bank account with NFCU. I do as well. I do as well. NFCU is very, very big on relationship banking. All credit unions want you to have a relationship with them, but Navy Fed is one that really wants you to have a banking relationship with them. If y'all have not looked at my Navy Fed videos, go back on my channel and go to my Navy Fed playlist and you will see some of those videos. They want a relationship with you. So they want to be able to see where you got direct deposit coming into your account, where you're using your debit card, where you are have money in your savings, open up a easy start certificate. It only takes $50 to open that up. Put money in a certificate every time you get paid. That's another way to start an emergency savings. Do those things to show that you have the ability to save money before you start trying to borrow money. Okay, show them that you have income coming in. That's on the personal and the business side. You want to make sure that any financial institution see that you have a ability to earn money. Money's coming in before you start applying for things. Because if they don't know how your spending habits is, then they're not going to give you the most money that you probably could get as far as a credit card limit, a car loan, a personal loan, whatever it is. If they see that you have money coming in and you have the ability to keep your account out the negative, you don't never have any returns, and you got a really good standing accounts, all your accounts are in good standing, that's how you get approved, even when we are in a situation as we are now where they're telling you that more banks are denying credit because there's more credit delinquencies out there. So they're going to be looking at the whole picture now. They're going to be looking at the whole picture. Your debt to income is going to really come into play. They're not going to really be caring about these scores, because scores can be inflated. You can go get your credit repaired and take off a charge off, and that don't mean that you are able to afford what you have. They're going to be looking at the whole big picture. Okay, they're going to be looking at all that. Does anybody else have any questions? Again, I want to show you guys the y'all go on my website, sign up for the newsletter, but the credit ready course information right now is still on sale until the class start on the 18th. If you have not looked at my welcome video, if you click on my website, Star Notes Credit, and if you go to the Credit Ready Course tab, you can see the video inside, and it will explain everything that I will be covering in the course. But I will go ahead and give you a quick run through. I'm going to be talking about money mindset and habits the first week. The second week, we're going to talk about the basics of credit, and I'm going to also give you an ebook called Rebuild and Restain, How to Have Excellent Credit. And it's going to be a whole guide on that. So the basis of credit, we're going to also, that's going to be the second week. The third week, we're going to be doing the snowball debt repayment. So I'm going to be giving you all a snowball debt tracker journal. And in that journal, I typed it all out. It's really nice. Y'all will be able to write down all your debts. You'll be able to do each page. You'll be able to put a debt on each page. And as you are paying them off, you'll be able to track all of that. All right. So the fourth week, we're going to talk about building an emergency fund. And the fifth week, we're going to talk about strategies for good credit maintenance. And on the sixth week, we're going to ensure a debt-free future. Okay, so I'm going to give you some investment tips and that type of stuff that's going to help you. Also, I'm going to be providing a wealth tracker journal. So you're going to be journaling throughout this whole 6 weeks. It's going to be like your homework assignments. It's going to be journaling in this wealth tracker journal that you will get. So you will be getting a rebuild, restain credit ebook that I wrote. You'll be getting a debt tracker journal that I created, and you'll be getting a wealth tracker journal that I created. So you're going to be getting 3 different PDFs. That's going to also come along with the course emails, and in those emails will also be videos. So head over to starnoscredit.com if you are interested in signing up for the course before the sale ends. Alrighty. So let's see. Can you have more than one personal loan with Navy Federal Credit Union? Now, it just depends on their lending habits. I can't say because I've never had a personal loan with them to know for sure if they will do more than one personal loan. Some credit unions do. It just depends on what their lending rules are. And also you got to understand they're going to be looking at your debt to income. What can you afford? When they grant the first loan, they definitely going to be looking at it. But if they grant the second loan, they're going to be factoring in the loan you just got or had, along with any other debt that you may have, to see if you can afford to take on a second loan or whatever amount you are trying to apply for. So it just depends on what your income looks like as well, as far as if they do allow you to have more than one, will they do it? They're going to look at all those criteria. Also, of course, as I was saying, the relationship you have with them, and the better your credit score is, of course, the odds are better. Best way you can boost your credit score, I always tell people, is to pay your credit cards down. Keep your credit cards under 30%. 10% is better, but that is a quick way to boost your score. If you have credit cards that are maxed out or over 30%, that is what's holding your credit score down 90% of the time, unless you have negative stuff on it like collections and what's some of the other things, bankruptcies, charge-offs, all those type of things that can cause you to late payments, that could cause your credit score to also be low. But if you don't have any of those things going on, and if your credit cards are over 30%, then that's what's keeping your score down 90% of the time. Somebody asked me on here, I think I saw it. Right here, Miss Star, do you do credit repair credit? I do not. It's a headache. It's a headache. I teach you how to be. My credit ready program is teaching people how to make smart choices so that your credit is going to reflect your good financial habits, which will automatically make your credit good. Some people, I don't think that credit repair teaches you how to be responsible with your money. That's just my stance. I don't like credit repair because unless credit repair is going to come in the form of education, then it may be beneficial. But for somebody to just take off in a delinquency or whatever it is that you may have done to get your credit bad and not educate you on ways that this may not happen again in the future, then I feel like it's not beneficial, because you don't learn anything from me just wiping wiping something negative off of your credit report. That you will not benefit from that. So that's why that's really one of the main reasons why I started the Credit Ready program. is because I just not an advocate for credit repair. I'm just not. I'm for credit education to teach people to. A lot of people get in trouble with their credit because they don't know how credit work. They don't understand about maxing out their credit cards, and that's why their credit gets bad. And they don't understand that the credit debt compounds, and that's why eventually it gets harder for you to pay those payments. Because as your minimum payment might have been $25 when you first got the card, but then eventually that minimum is going to grow as the interest is compounding on top of each other because you're not able to pay the card back off every month. So then you are essentially losing money. What cost you $500 is going to eventually cost you $3,500. $500 shouldn't cost you $3,500, but that's how interest compounds. And then that's when eventually you're not able to pay the credit card back. And then that's when you get late payments. Then it gets the link. You know what I'm saying? It's like a snowball effect. But if you don't learn how to be responsible with your finances, then if I did credit repair and removed it, if I'm not teaching you better financial habits, what's going to stop you from doing that again? Because you haven't learned anything, you know, that hasn't taught you to be better with your money. So if you're better with your money, doing some of the tips that I talked about earlier in this live, then you're going to do the same things. You're going to go out, get more credit cards, max them out, be right back in the same situation. Once you get out of that situation, then you will be able to, you won't worry about late payments or having to file for bankruptcy and all those type of things because your good money habits will reflect on your credit. Thank you so much. Give me cash. I got denied the other day from Navy Federal for a 30,000 credit increase. My credit score is 815. Navy Platinum card on has 15K on it. Well, as I was saying earlier, in the live, the they're just denying credit. If you wasn't here from the beginning, credit is being denied, and a lot of times it's really not having a lot to do with what your credit score is. It's just that people are relying on their credit more. So that could have been what it is. Could have been what it is, even with a good credit score. It could have been what it is. Also, you want to check. They should send you what they call an adverse action letter if you have not already received it. And in that letter, it will spell out what it was that you did not, have going on or whatever for them to give you the approval. Sometimes it could be how much credit was you shopping for? Have you had several inquiries this year? That can stop you from getting a credit card increase. What is your utilization on the cards that you have outside of Navy Federal? Make sure that those are under 30% and all those things. Now with a credit score 815, I'm pretty sure that your utilization on your credit card should be excellent. So you may want to look into, was it the amount of inquiries, what's your debt to income? Is your income in line with the amount of debt, or are you taking on too much debt? All those things will come into play as well. And I also said Navy Fed is really, 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 really want you to have a relationship with them. So how are you handling your personal accounts? Do you have direct deposit and all the good stuff that Navy Fed looks for? Is going to also be a determining factor. I am Somebody asked me to pin the website there. Somebody asked me to pin the website there. Somebody asked me to pin the website there. Sorry, guys. I had tried to cut it on another screen to pin the comment. I will pin it once I figure out how to work it. This is my second time going live, so I gotta figure out. I know how to pin it when I'm on my phone, but my phone's not in here. So I was trying to figure out how I could do it without, but I saw it had a lot of feedback. So anybody else have any more questions before I end this live? Thank you so much for everybody that has sent me a super chat or sticker. I really do appreciate it. Well, there are no more questions. Then I really do appreciate everybody for tuning in to the live today. I know some people might have been looking at get ready to look at some preseason games. Is any football fans out here that's getting ready for next month when the official season kick off? I love football season. It's one of my favorite times of the year. So I'm excited for that too. But again, I do appreciate you all, and I'm going to catch you in the next video. If y'all have any questions, make sure that y'all hit me up on my website, on my contact page at starnoscredit.com. If y'all have any questions, I will respond to y'all through that contact on my website. Y'all have a wonderful evening. Steelers. Oh, Steelers. I'm a Baltimore Ravens fan. If I could turn my monitor around, I'll show you all my Ravens jerseys that's on the wall behind me. Yeah, I'm a Baltimore Ravens fan. So, yeah, I don't have any of it back on this. It's all on that side of the wall. I can't show y'all my painting that my son had did for me one year. My son painted this for me. I think he might have was 12 or 13 or somewhere. But yeah, he made that painting for me. That's how big of a fan I am. Like I said, on my wall back here, I got all my Ray Lewis jerseys and Ed Reed. What he said? Then he said, no. And then he said, what's the other one? Nice. uh, who is Mr. Ralph? I don't see. Did you put a comment or something up here that I missed or something? I don't quite understand. Okay, I see that. Guess I gotta come back next time. But did you put something on here prior to that? All right. Well, thank you guys so much again for tuning in. It's about to be an hour, so I don't want to waste any more of y'all time. Thank you again, and I'll see y'all in the next video. Peace.